Hello everyone, welcome to my YouTube channel. In this particular video, I'll give you the important questions that might come in section B from the secondary market chapter in the subject financial institutions and markets. In that first question, which we can expect for section B is features of secondary market. So what are the characteristics of features, or they may even ask it as characteristics of secondary market. So it is a market for securities. So in secondary market, even the government securities are issued, the public company securities are issued. So all the securities of government and companies are bought and sold. So it is a market for securities, various securities. Next, it is a second-hand securities. Means securities which has already been issued in the primary market are traded in the secondary market. So it is a second hand. Firstly, the shares is already been issued in the primary market. That shares is traded in the secondary market. Regulates trade in securities. See, trading doesn't happen on its own. The brokers or the exchange members on behalf of the company, they will do the trading in the secondary market. Trading doesn't happen on its own. Dealings only in registered securities. So in the exchange office, okay, securities exchange office, only those securities which are listed, that will be recorded in the exchange office. So it is only dealt with the listed securities. Next, the transactions. So who can do the transaction in stock market is only the authorized brokers or the underwriters or the members. Only these members can have the transaction done in the secondary market. Everyone cannot do the transaction in secondary market. Recognition. So whatever the securities are there, that has to be recognized by the central government. So it requires a recognition from the central government. Measuring device. So the economic growth of the organization can be determined by how well the country is performing in its financial market. So the economy of the country decides how well the financial system is implemented in its country. So it happens to be the measuring device for the organization. Even it even if we can measure the growth of the organization, if the organization's share price in the secondary market is very high, it has more demand, then which we can say that the organization is doing very really well. So similarly, if the share prices come down, then we can say that the organization growth is declining. So it indicates the growth of the organization also. Operate as per the rules. So this secondary market has been regulated by the Securities and Exchange Board of India, that is SEBI. SEBI regulates the secondary market. So whatever the operations happens in the secondary market, it is as per the guidelines, rules and regulations of the SEBI, that is Securities and Exchange Board of India. Next. Next question says players in stock market. So what is this players and stock market means? Who are the intermediaries? So we can even think them as the intermediaries also. First one is investors. Investors are the person who are ready to invest their money in the shares, debentures and various financial securities such as shareholders, etc. So for the amount they have invested in the shares, they will get the dividend on shares, and they do have certain privileges such as voting rights. So they do also have certain privileges. Next is stock brokers. So the brokers in the secondary market. So these brokers must have the license obtained from the SEC, Security Exchange Commission. So they will even, what do you say, they will give the license, okay, for this agents. So this brokers, they are the agent between buyer and seller of the stock. On one hand, we have buyer of the stock. On other hand, we have seller of the stock. Between these two people, they act as a agent. They execute the orders in the market. So whatever the buyer of the shares, they would have given the order for the shares. So it is the duty of the brokers to execute these orders in the market. Next is listed companies. Listed companies are the issuers who issue the shares. So these are the companies. So these companies would have issued their shares in the primary market through initial public offering or IPO. Next is depositories. we have two depositories, CDSL, Central Depositories and Securities Limited, and the NSDL, National Securities and Depository Limited. So what happens, whatever the shares the buyer has bought, all those securities of the investors will be held in electronic form. They have brought the dematerialization account. In short, it is known as demat account. So all your securities and all the investments are held in the electronic and digital form. Next is transfer agents. So transfer agents, what they do, they give the list to the company of all the shareholders. So who are all the shareholders of that organization? They provide the complete list of holders of the investments. So even they do take care of the about the dividends of the shareholders. All those are taken care by transfer agents. Next is credit rating agencies. So this credit rating agencies, they will what is it? They will evaluate the credit worthiness of an organization. So what is so it is like, suppose how much credit the organization will be able to repay. So the credit worthiness of the organization will be given by this credit rating agencies. They will give something known as CIBIL score. Based on that CIBIL score, the credit worthiness of the company will be decided. Next, investment advisors. So these advisors are the firm, they will advise the investors about which companies share to buy, what kind of investment to do, what amount to be invested in a particular company, which company's shares are better to purchase. All these details will be given by investment advisors. Next is clearing corporations. So the settlement of shares. Suppose you have purchased the share, it takes 2 working days to get the share allotted to you. So all this settling process, complete trade settlement will be done by this clearing corporation. They are responsible to ensure that the tradings have been successfully closed. So these are the players in the secondary market. Next, we have Bombay Stock Exchange. So one important question they may ask, that is functions of Bombay Stock Exchange. First one is price determination. So as I've told you in the differences between primary and secondary market, in secondary market, the prices of the shares depends upon the demand and supply in the market. So the BSE checks that it evaluates the price of each security. So investors can also check the prices of the shares through Sensex. So they can check the price shares through Sensex. Next, contribution to the economy. So trading means, of course, reinvestment will happen, disinvestment will happen. People will again reinvest on the shares. People will take back their money, that is disinvestments. All these things are involved in the trading. So what happens when the investments and reinvestments are taking place? This will enable results in the capital formation of the economy. So it will indirectly boost the economy. Next, facilitates liquidity. So what happens? BSE is a platform for trading securities. So it is a platform where the investors can buy the securities, sell the securities. They can convert their securities anytime into the cash. So when BSE provides this liquidity, investors will have the confidence that whatever the securities they have in their hand, they can convert it into cash anytime they want. So this confidence it builds a kind of confidence in the investors. Next is transactional safety. So what happens is, first the BSE, Bombay Stock Exchange, ensures that all the securities are listed, okay, in the stock exchanges. Whatever the securities have been listed in the stock exchanges, before listing it, will check the company's financial position. If it is satisfied with the company's financial position, only then the securities will get listed under Bombay Stock Exchange. So what happens after the company becoming the listed company? It should follow the rules and regulations of the SEBI, Securities Exchange Board of India. So whatever the guidelines SEBI says, it has to strictly follow that. So there is a transactional safety. Next, one more question is functions of NSE. Functions of NSE, there are total 5 functions. National expansive trading facilities. So throughout the nation, throughout India, you can trade. Throughout India, you can buy the securities. Throughout India, you can sell the securities. So your stock exchanges have been open to the national wide. Next, investors get equal opportunity to trade. So it ensures that all the investors, small investors, large investors, medium investors, everybody will get an equal opportunity to trade in the secondary market. Next is fair, efficient, and transparent securities market. So NSE makes sure that there is a fair practices. There is no speculations or any malpractices is not done. It ensures that no malpractices should be done in an organization. So that has to be ensured. The NSA will ensure that all the financial details of the company is transparent to the investor. Transparent means the investor should know the complete financial details of the organization so that the investor can make a decision of whether to invest or not. Shorter trade settlement period. NSE has come up with an idea to finish off this trade settlement at the earliest. So usually before it was taking long time, but after the statute of NSE, the settling period has come down. So saving it has saved the time required to settle the trade. Meeting the international standards. So whatever the international standards are there, those standards have been set for our secondary market through the NSE. These are the functions of NSE. That question also might come for section B. Next, we have fifth one, that is objectives of SEBI. What are the main objectives of SEBI? First one is investor protection. So it has to give protection to the investors. Investors should have certain safety about whatever the amount they have invested into the organization. It is their hard earned money. So their investment should not go on waste. So the proper investor protection will be given. That is one of the objective of SEBI. Next is prevention of fraudulent activities. So any manipulation in the share market or hedging or speculation, creating an artificial demand, all these fraudulent activities will be prevented under the SEBI. That is one of the major objectives of SEBI. Develop code of conduct for underwriters and brokers. So SEBI has come up with an idea to set up the rules and regulations for the brokers and underwriters. SEBI also issues certain licenses for the brokers. All brokers should get registered under SEBI. So they have developed a code of conduct for the investors as well as investors also as well as underwriters and brokers. So this question also they may ask for the section B. Next, you have one very, very important, that is functions of SEBI. So in that first one is protective function. So protective function means first it has to protect the investors as I have told. Next is prohibits insider trading. Sometimes what happens is they will sell their shares to their own employees, to their own families. Insidernally, they will start trading it. So all those things have been prohibited. SEBI has prohibited all those things. Check unnatural fluctuations. Some speculators will create an artificial demand for the shares and all so that investors will come and buy. To attract investors, they will create an artificial demand. So in order to avoid all those things, the SEBI has have a clear eye check on all this unnatural fluctuation. Next, promoting fair practices. So in case of buying of shares, selling of shares, transfer of shares, all the fair practices have been implemented by the SEBI. Next, financial education provided. It should give training and it should create awareness among the investors in order to have a safe trading. In order to have a safe trading, the investor should have complete education about the trading. So they should not lack awareness. So it is important to have the awareness in the trading. Next, regulatory functions. So SEBI establishes rules and regulations. For brokers, there is a rules and regulations. For underwriters, there is a rules and regulations. Even for uh, but who is that issuer company or the corporations, they have its own rules and regulations. So SEBI has streamlined everyone under its regulatory body. Next, audit of stock exchanges. So all the stock exchanges in the country should be audited so that if any manipulations, frauds have been done, that can be easily that will come into picture. So the stock exchanges should be audited. Next, regulates the stock brokers and underwriters. So even the stock brokers or the underwriters are regulated under SEBI. They need to follow the guidelines, rules and regulations put forth by the SEBI. Next, SEBI has one more development function. So training of intermediaries. So the brokers or the underwriters, they should be properly trained how to handle the trade, how to handle the investors. So all these things, training will be given by the SEBI. Introducing trading to electronic means. Nowadays, trading is happening to the electronic means. So the investors, brokers, and underwriters should have the proper knowledge as to how to undertake this particular trading. So, to the electronic messages, one of the latest recent trends that the SEBI has brought. So, trading in electronic form. So, everybody should be given the proper awareness and knowledge about all these things. So, this is the expected section B questions from chapter number 4. From my next video, I'll come back discussing the section C questions.